the battle for the rails here, KSU. Yesterday, we got something from the STB, the Surface Transportation Board, that scared a number of shareholders here, because it appeared, wait, did they say that they won't give a voting trust, which is the key here, to Canadian National? And yes, they did, but no, they didn't. They said, well, we're not going to approve a voting trust yet because we haven't seen the merger agreement. And so from its point of view, Canadian National says, hey, we're committed to addressing any concerns like that. We'll give you the voting agreement as soon as we can. And they went on to say STB's procedural decision to defer consideration of a voting trust was based solely on the fact that a merger agreement for the combination between Canadian National and KCS was not available to be filed. They go on to say they're committed to addressing any competitive concerns to be successful in completing this combination. As you might imagine, Canadian Pacific had a different view. They said there's a lot more to this. And, you know, to be fair, they could have just said that in a few sentences, the STB, but they didn't. It was a pretty long filing. They said, with this new ruling by the STB, CP's confidence in the superiority of its friendly agreement is redoubled. The fairness of their outstanding offer to acquire KCS is compelling, and it's the only one that's viable. What I can tell you is that Kansas City Southern, unless CP raises at this point, and they have until Thursday, I think it's after business hours to do so, they're still going to most likely, it would appear at this point, stick with what they've got from CN and go and sign that merger agreement with them. They get $1 billion if they don't get a voting trust, and they expect that CP will still be there if that should be the case. And they still believe, more likely than not, that they will get the voting trust. So that's where things stand right now. You can see what happened to Kansas City Southern. Another story I want to get to on with you, Jim, is Duke Energy and Elliott yesterday coming out. Not a surprise. There's been some press on this, but they did move forward with a more activist campaign, basically saying we want you to split up. We want you to split into, what is it, into three separate entities, essentially. We believe that Duke should conduct a thorough, unbiased review of a tax-free separation into 3 regionally focused, publicly traded holding companies, utility holding companies, Carolinas, Florida, and the Midwest. What do you think?
Well, they did. A lot of these utilities are worth more broken up than not. I did a piece on Friday about Crown Castle and how Elliott approached things. They came in, they gave a presentation, they were allowed in. A company basically said, we don't really like it. And then the company did pretty much exactly what these people do. And I have to tell you, they do high quality work at Elliott. Now, I understand that Duke doesn't think that their utility work has been as good.
They believe that scale is extremely important in this business.
Why is that?
Well, they cite a number of different reasons, including comments from Sempra's CEO, Jeffrey Martin.
I love Jeff.
One of the outcomes from the pandemic was this belief it's important to be larger and a market leader in every market. They cite Gail Klappa, WEC's executive chairman. Longer term, I still believe we're in a consolidating industry. I still believe scale matters. Duke's coming out and fighting, which is always interesting. Here's a quote from their release rebutting what Elliott said. Elliott's approach to Duke Energy thus far is reminiscent of Elliott's decidedly mixed results in the utility industry, as shown by recent activity with Sempra Energy, First Energy, and Evergy. These utility share prices have materially underperformed the sector to date since Elliott became involved, establishing an unenviable track record of shareholder value destruction.
Shepard Smith here. Thanks for watching CNBC on YouTube.